see currencies like football teams. There's never the best. There's perhaps one team that has had rather a good run for rather a long time, whether it's Chelsea or Man City or whatever. And if you don't support that team, you probably get very depressed to see your team always at the bottom. But then things change. The leopard changes its spots. So what I'm looking at is I'm looking to back the team, i.e. the currency, that's moving up the football tables at the fastest rate. I don't care whether it's top. I just want one that's moving up. That's what I'm looking at. And then against that, I'm going to sell the one that's moving down fast enough and faces relegation into another group of teams. Okay, so that's where you make it. So, for example, dollar-yen for an awful lot of the last 14 months has been a hiding to nowhere in terms of trends. You'd be far better off, say, looking at euro-yen or sterling-yen or something like that, right? Likewise, in terms of emerging markets, I would have been selling maybe the South African rand, the Brazilian real, and against that be buying a really solid one like the Swiss franc, to a lesser extent the pound, and of course the US dollar, not forgetting that. Starting from the time of day, as we've just mentioned earlier, there's certain times of day where liquidity just dries up. Again, as I call it, the big boys, the liquidity tends to go to them, and the little fry, the small fry, tend to be much more niche markets, and you've got to pick your tactics, pick your timing far more carefully. Be more patient with it as well. Even perhaps sometimes you have to ask for a quote. This is not unheard of in many markets. You'll go to your regular market maker and he might say, gosh, I haven't had anyone asking me for a quote in that particular bond. Let me do a bit of homework and rustle up some interest and see what kind of prices I can come up with. And then obviously the bid-offer spread will also change. I suppose almost sort of volume begets interest, begets volume, and feeds on itself, I think. Also, if you want to deal in particularly large amounts, and this is the case more for bankers, if you've got stuff to shift in very, very large amounts, you have to concentrate in things where you know that the liquidity pool is very deep indeed.
And how are all the currency pairs created equal, and how would this affect trading?
No, they're not created equal at all. I mean, we think that currencies, do you know what I mean, are an infinite variety. What you're actually able to trade is a small handful. I mean, I think there are about 200 countries in this world. I challenge anyone to give me more than 25 different currencies that they have ever traded. So you can see that the pool that we're using is a fraction of the possible.
How many are there total?
I mean, well, it depends on how liquid you want it to be. I mean, I can do Turkish lira, but it's hard work. And I don't know many spread betting firms that are going to quote me happily decent two-way prices in the Turkish lira, but it is tradable. Likewise, say I don't want to put fingers on anyone, but like the Malaysian ringgit, at times it's tradable, at times it's pegged, and that's the end of that. So you can't do it, end of, depending on government policy. But basically, you've got your main currencies where we used to have a lot more in Europe. Now we've got the euro, haven't we, and a few scattered around the edges. But there's not much quoting in the retail market for Hungarian forints or you know, Belarus is. I don't know what they have.
No, I just wonder, I mean, how many currencies are there globally? I'm just
They're
asking,
very,
curious.
yeah, I thought it was you, but I wasn't sure if it was a thing. There are surprisingly few.
Yeah.
In terms of the majors, we have currency majors and we have minors, we used to call them. And as I said, they're kind of shifting. It's not a fixed thing, right? And some are just untradeable anymore, and just a joke. But the majors are dollar, yen and euro. Those are the big boys and they dominate absolutely everything. Then you've got the next tier down that are the Swiss franc, sterling, so-called commodity currencies, which are Aussie, Kiwi and Canada. And then within that you've also got the Swedish and Norwegian kronas, which are your minor currencies, shall we say. Then you've got a bunch that we tend to lump as the Asian currencies, of which some are tradable, some are not, but that includes the Indian rupee, Thai baht, Malaysian ringgit, Indonesian rupiah, Chinese yuan, and that's about it. And then you've got a whole load of others that are semi-tradable, so that includes the whole of Latin America, where Argentina insists on having a peg to the dollar, but that's just, as the saying goes, it's just for the Englishman to have a look at, that's all. Just like, forget it, it's a joke. And then you have all of Africa, of which many, and then Middle East, of which many are totally pegged to the US dollar, which is the case of Hong Kong, and has been a tremendously successful peg for about 35 years, maybe more. Very successful indeed. Saudi Arabia and the Arab Emirates.
Mm. Yeah, I'd be interested in know if there's anyone who does actually trade some of those minor ones.
Well, I look at them, you see, Martin. I do look at them. I do know, because that's, again, when I mean, I don't look at them every day, but as I say, just like I started taking a closer look at the Saudi Tadawul index, I'm looking just in case there's a bit of pressure building on the real exchange rate, you see, and it does happen sometimes, it does. But it hasn't rocked the boat yet, but it is worth just keeping an eye on, yeah. As I've just mentioned, Aussie, Canada and Kiwi, it's an unbelievably sloppy way of chucking these three variations of the dollar together. And the idea is that these three countries' economies depend very much on the price of commodities. New Zealand is all to do really with the price of sheep milk, which they have been incredibly successful in rejigging their farming industry over the last 25 years or so, phenomenally successful there. And then Canada and Australia, which are a mix between agricultural commodities, minerals, and obviously in Canada, energy. So that's why they all tend to be lumped together, and they tend to suggest that the dynamics behind them are the same. I personally disagree vehemently, and I'd suggest that if you wanted a commodity play, you ought to be looking at things like Brazil, Argentina, and some of the African ones as well. Obviously, we've always looked at West Africa and cocoa prices. It's very, very important there for that economy. And then gold in South Africa, gold, diamonds and platinum in South Africa have always been terribly, terribly important there as well.